This is Rick Rule for Rule Investment Media and the Rule Classroom, sponsors of the 2025 Rule Natural Resources Symposium in Boca Raton, Florida, via live stream wherever you happen to be. The conference will take place July 7 through 11, so mark your calendars. A few things to know, whether you attend live or live stream, we're going to give you more valuable programming in 4 days than you can absorb in 4 days. To that end, whether you attend live or live stream, every part of the proceedings will be recorded, and you'll have access to those recordings for a year after the event. In addition, we are interviewing every single exhibitor and every speaker before the conference so that you can arrive at the conference prepared. Interview or study the exhibitors before the conference so that you arrive ready to allocate your time and your resources more efficiently. Couple more things that you need to know. One, every public company exhibitor at this conference has been vetted. At every other conference that I know of, the qualification to be an exhibitor is merely a check that cashes. At this conference, public company exhibitors must be owned in the accounts of the conference sponsors. No guarantee because we own the stock it goes up, but there is a guarantee that we have vetted every single exhibitor. That makes your job easier. So let's get on with the process. Today I have the good fortune to interview Gerard Bond of OceanaGold. Note that I am a shareholder of OceanaGold and have been on and off a shareholder for a very, very long time. I've watched this company over years. So, Gerard, first of all, thank you and your colleagues for really decades of effort on behalf of mining investors, but thank you specifically for your support of the Natural Resources Investment Symposium.
Well, thanks, Rick. Thanks for being a shareholder, and thanks for having me on the program today.
Just as a note, I'm an old mate of James Askew, who was around Oceana early on, and I've been a beneficiary of his genius, I'm delighted to say, for almost 4 decades. Let's start with giving our audience an overview of the existing assets in OceanaGold. My thesis has been at today's gold prices, the sum of the parts is likely worth substantially more than the price of the whole. And perhaps you can make me look smart with this assertion as opposed to stupid.
Yeah, thanks. Well, I mean, as you say, the company has been around for a while. If you've been following it for decades, that's because the company's been alive for as long as its foundation asset, Macraes, in New Zealand. It celebrated its 35th birthday in March of this year, and that's an achievement for gold mines. It just shows you its resilience, but also the capability of the team, but most importantly that there has been a lot of gold there. So we have 4 operating assets. Macraes is the foundation asset in New Zealand, as I said. We have another mine called Waihi in the North Island of New Zealand. Together they represent around 30% of our NAV as assessed by the market, and a little under half of our production. We have another mine in the Philippines called Didipio. Fabulous asset. We built that. It's a copper and gold producer. That means, for one process, we get 2 metals, and that means it produces very low cost gold and is highly cash generative. And we have Hale Gold Mine in South Carolina. That's been in the company for a decade. And that represents around 50% of our production in 2026. It's about 40% of our production in 2025. So just by dint of that, you can see that we have growth coming out of North Carolina, the Hale Gold Mine, that is. And if you add to all those assets together, the good thing is every one of those assets is producing gold today profitably. Every one of those assets has a degree of growth optionality around them. One of them has a particularly exciting growth option, which I'm sure we'll talk about. But yeah, 4 producing assets. And if your assets are producing gold rather than being built, but we're just in the process of mining it at today's gold prices, that means you're getting fabulous returns on that activity, and we are.
Tell us something about the margins that you enjoy at 3,400 US gold. The fact that you guys were alive at $500 gold means that $3,500 gold must be substantially more pleasant.
Yeah, look, it's a great time to be in gold stocks at the moment, and I think the gold equities haven't quite yet fully reflected the relative value that you can see in the sector. I mean, in the 12 months to 31 March this year, we produced about $320 million US in free cash flow. And free cash flow, I mean, that's the money that's left only to go to the shareholder because we have no debt. So we generated $321 million of free cash to go to the shareholder. And as a percentage of our market capitalization over the same period, the average market cap, that was a yield of 16%, using an average gold price at that period of around, I think it was around $2,800 US. So to your point, Rick, when you then plug into your model a $3,400 gold price, that free cash flow yield is even higher.
One of the things that we need to talk about in addition to the yield is sustainability. Every day that you mine, your business gets smaller. So tell us something about the sustainability of your existing mines, and tell us something about how you may be able to use some of that free cash flow to grow the company and sustain those wonderful yields into the future.
Sure. So look, I might go by asset. I mean, at Hale Gold Mine, it's got a reserve life that takes it, well into the 2030s. But in February this year, we announced a discovery between two of our underground ore bodies, called Horseshoe and Palomino. We found another target called Pisces. So we're going to drill that this year, and that along with some other targets that we have in and around the Hale Gold Mine shows that there is exploration potential and resource growth upside at Hale that's very real. At Didipio, we mine a copper gold porphyry. It's open at depth. What that means is we still have yet to find the bottom of the ore body. We've put a few special holes that go deeper in there, and they've returned really impressive mineralization at grades similar to what we're presently mining higher up the ore body. So we have exploration upside inside of the Didipio mine, but also a really large land package that's highly prospective that we're drilling. Macraes, as I said, has been going for 35 years. It started with a reserve life of 9, and that's testimony to the fact that we've got something like 35 kilometres of strike that we mine up and down and have done over a long period of time. And at these gold prices, with further exploration and further development, we have the potential to extend its mine life further using a higher price tag. And then there's Waihi. I mean, Waihi, I kind of alluded to it before, Rick, it has our most exciting near to medium term growth project called Wharekirauponga, or WKP for short. We released a technical report on it in December of last year. It's a fabulous ore body. We booked 1.2 million ounces of reserve at an average grade of 9.2 grams per tonne. This is a fabulous ore body. We only have 3 rigs on it at the moment. We're looking to drill further. And then to answer the back half of your question, we're putting about $40 million into exploration this year. And we believe that, when you have prospective land, and we feel we do, that's the best way to achieve that sustainability that you're talking about.
The corporate culture around Oceana seems to have been buy and build. I remember the Waihi purchase. For the record, I used to live fairly close to Waihi, so I watched that with some interest. And also, of course, the Hale purchase. Tell us something about what acquisition criterion would look like if you chose to grow non-organically.
Yeah, well, look, we, like every jurisdiction that we're presently operating in, we operate in the USA, New Zealand, and the Philippines presently. The company has a strong Australian heritage as well, and just given my own background, very comfortable with operating and or looking at assets in Australia. And of course, Canada, where our head office is in Vancouver, and equally comfortable about evaluating prospects in those regions. So USA, Canada, Australia would be the areas that we would focus on if we were to undertake inorganic growth.
I would argue, possibly as a consequence of being around Agnico Eagle for 30 years, that a competent build team is a really, really, really underrated asset in a gold mining company. So congratulations on your track record around the buy and build. To the extent, Gerard, that our audience is interested in a gold mine, my quote, not yours, that we're in a circumstance where the market capitalization seems to be understated relative to the value of the sum of the parts, and also around a culture and a team that has proven ability to grow both organically and inorganically. Pretty good commercial, huh? Um,
Keep
who
going.
who specifically at OceanaGold can our listeners reach out to learn more? Where do they find out more? What living, breathing human being do they contact, and how do they contact this person?
Sure. Look, Hayley Mayers is our VP Investor Relations, and she's supported by a lady called Valerie Burns, who also is our Manager Investor Relations. And you can basically reach out to them using those names, HALEY Mayers, at OceanaGold.com, and Valerie.Burns, BURNS, at OceanaGold.com. And the phone number I can give you as well, Rick, which will put you through to one of those two, is 604-678-4123. They'd love to take the call. We have a great team. We have a great story to tell, and they would welcome any of your callers making contact with them and answer any question that they have.
Gerard, thank you to yourself and your team for decades of toil on behalf of mining industry investors, particularly myself. And thank you, too, for your support and sponsorship of the Natural Resources Investment Symposium. I look forward to hosting you in Boca Raton.
Likewise. Thanks, Rick. Appreciate it. Have a good day.